Hello, my YouTube friends, and happy Thursday. As the stock market continues to surge towards record highs, see stocks like Intel and Robinhood continue to go higher. So stick around, we're going to talk about the markets or anything else that comes to mind, like usual. So, what the heck is going on? The government shuts down and stocks just continue to surge higher. Well, quite honestly, I almost think the longer that the government is shut down, the higher we're going to see the market go. You had the Fed cutting rates into a strong market already, which generally tends to mean that the stock market averages 40% increase, if I remember correctly, when the Fed is cutting rates into a strong stock market. I kind of think that's where we're going. And as I've talked about in other videos, I'm half waiting for it to go parabolic and you see things really take off. And this is like the late 90s pushing into 2000 where the market kind of goes nuts. This time won't be .com, it's probably going to be AI. But me, who's old and kind of remembers it, this is the beginning of the boom, not the end of it, because we haven't drawn in all the people who don't normally invest. And quite honestly, that's a long way away if we're going to get there. What would be better for the economy is a nervous market like we have now, where people keep waiting for a pullback and it just keeps chugging along without going too high too fast. Kind of like in that movie Major League. It's too high, it's too high. Well, maybe not. As long as people continue to be nervous and the market doesn't just take off and go crazy, that's actually a good thing. But it feels exciting to me where it's like pushing along and the bull market just keeps raging. And then you have things like what I keep talking about, Intel. So why do I like Intel? Well, I don't love them as a company in a lot of respects, but the fact that the government took a 10% equity stake and the administration that we currently have in, I think that they're going to force it to do incredibly well. And when I look at their market cap, because I looked again and where it closed yesterday was 167 billion. Well, that sounds kind of expensive for Intel. But then look at Nvidia, and I don't mean to compare the two because they are not the same company. The earnings are totally in the opposite direction. But Nvidia is a 4.6, I think, trillion-dollar company. They've changed the laws where Intel is a way to circumvent the tariffs because they have the infrastructure in place to make the chips in the US. So all of a sudden, they're working deals with companies outside of the US to make the chips for them, which is going to help increase their earnings. You add to it another layer that the government could come in any time and give them a huge contract to redo the computers in the military, the Congress, the Senate, the White House, anything that's government related, and call it a national security reason that we have to replace all of this stuff, giving them another avenue for revenue. And it's not that I'm super excited about Intel. It's more that I'm jumping on the bandwagon instead of fighting it. It doesn't matter who you like, who you root for. It's just doing an analysis of what makes sense. And look, there are going to be pullbacks along the way. They are going to have down draws. It is not like any company just goes straight up. My theory is I don't care if he has to use taxpayer money to spend $500 billion to make the company go up $200 billion. At the end of the day, he'll be able to pat himself on the back and say, I made Intel double in price. I think the two of where the money comes from and how much it actually drives up the stock are going to be things that people aren't going to notice. And I'm still really bullish on Intel despite how far it's already moved. So I just see it as a great opportunity. Robinhood is really interesting to me considering how far it's gone and that the PE ratio doesn't look so crazy to me and they're continuing to grow. So I'm watching these companies continue to make new highs, push the right direction. The economy's chugging along okay at this weird wonky time where unemployment is a concern. It hasn't become a major issue yet, but we had a certain amount of people lose jobs this year that's more than, I forget what the person said. I don't remember what date it is and I don't want to misquote it, versus having too few new job openings. And it's just creating this weird situation where we haven't seen unemployment spike, but everybody's scared to lose their job because there aren't other opportunities to get into other things. Companies are doing cutbacks because the AI is helping them to do more jobs with less people. The other stock that I'm noticing that I mentioned a bunch of times and was banging my hands on the table is United Healthcare seems to have made a really nice consolidation period and looks like it's beginning to creep higher, which is super cool because it makes me think that the next leg is to the upside. Now, as always, this is not financial advice. I do not know that it's the upside. Nobody can predict the future. By all means, do not listen to me or anybody else on YouTube. You need to do your own research when making financial decisions. I am not a financial advisor, so please reach out to your financial advisor or whomever it is that you discuss your financial decisions with. And what I'm noticing from what I see in United Health is it looks like it's consolidated well. It looks like it's beginning to break out to the upside. And that makes me hope that we have another, I don't know, 20 or $30 higher before we consolidate again. I really think United Health is going to continue to go higher and make new highs the same way that CrowdStrike did when it collapsed on all the bad things that were going on when they had that outage. I see it as a similar type of opportunity. There was so much negative going on with United Health. You saw the biggest influx of insider buying over those months in a huge amount of time frame, even when they combined years and then compared it to that short time frame, as well as people in Congress and Senate buying the stock as well. It makes me believe that there's a good chance that the things with the Department of Justice aren't as bad as the media made it out to be and could end up being a nothing. And if it is, there's really no reason the stock won't go right back up to the old highs. And if it does, since so many people sold out of it, that creates an opportunity where it can just blow through them and make new highs, which I know sounds really crazy considering how far away it is. If I remember correctly, the old highs were 600 and something and the stock is only at $350. To think it could go right back up there in less than a year, which is kind of what I think, is really mind-boggling. So, I'm not saying to jump in here, but if you don't have any, I might be buying some with the understanding that you could get another pullback and maybe an opportunity to add on. But I think they're a good company that had a lot of bad negative information coming out that drove them down to be the best bargain in the stock market. It probably is still the best bargain out there. It just doesn't feel that way because of how far it's come already. And I know there are tons of you who love to hate Target. I mean, Billy, I love you out there, and I know you call it that Kmart bought them out, but Target's a great value here. It just is. Unless things just get worse, which I don't really see happening because they're actually implementing a whole lot of new things over the next few years to use AI and technology to really change the stores and drive it in a new direction, which is kind of surprising since the new CEO coming in is nobody who's coming from outside of the company with a new insight. It's somebody from in the company, and you would think it would be big and boring and nothing changing. But it doesn't appear that way to me. And where their earnings are currently, you're only paying a 12 PE going forward, which is super cheap for a company that's driving the amount of revenue that they're driving. On top of it, their payout ratio to pay a dividend that's over 5%, if I'm remembering correctly, is less than 50% of the revenue that comes in, making that a super safe dividend at a really good yield. Now, I know you guys hate Target. It's fine with me. Sometimes it's even better. And the longer that it makes the base, if it finally starts drifting higher, generally the better the rally becomes. I have Target as a long-term hold. I do not expect it to go straight back up. They are going to need multiple quarters showing increased revenue and increased profits to actually start driving the stock in the right direction. But I think it's a great opportunity. It's a really good value. I see it as a much better bargain than Costco, where I love the company way more than I love Target, and Walmart, Where same thing. Like if I were going to pick my favorite, if you put Costco, Walmart, and Target right next to each other and I had no idea about valuations, no stock price, no nothing, I would pick Costco first by far, then Walmart, and then behind Walmart, Target. But I like them, I don't want to say in the opposite direction, but I would reverse Target to be number one based on the valuations. Costco number two, where I'm cringing because it's very hard for me to think paying 50 times earnings on a stock growing at like 8% year over year. And then Walmart last because same thing, they're not growing at a very fast pace. They have a pretty high multiple. And while they're only using 30% of their cash flow to be able to pay the dividend is pretty minuscule. I think it's 2%, if I'm remembering correctly. So it doesn't have a ton of room to really be able to raise the dividend significantly without beginning to creep in on those profits. So I know everybody hates Target. I just like it based on valuation. It is not my favorite company. I just put it in the category of it's oversold and probably a good value. The other one I'm beginning to notice that I'm beginning to like because I think it's bottomed out long enough is PayPal. Now, I don't love it, and I haven't done a deep dive to look at the research yet. It was more just some analytics from somebody who actually uses it in their business and started explaining some things about, you know, I don't know if you guys have noticed, but I've noticed more often when I go online and look at things, PayPal seems to be more of an option in checkout. Well, the retailers are finding out when they add them and include them as an option on checkout, 10% more sales than when they don't. So that's pretty significant if you're a big company that's trying to do online selling, which is most of them. What I really love about the market is once again, I feel like bad news has proven that any dip is an opportunity to continue to buy. Now, that can change at any time. So I don't want it to be heard anytime the wrong way about just buy, buy, buy. But when I tell you I am super bullish, I am still super bullish. I just haven't seen anything that indicates that we're going to have a huge correction. So when I hear the people on the TV talking about how overvalued we are, while I agree with them, you don't fight the trend. You know, the trend is your friend, and time in the market is more important than timing the market. So, whatever you normally do, if you put away every week or every month or whatever it is that you do towards investing, I would just continue with your strategy and just continue to keep putting away. I really don't see anything that out of a black swan event that's something we just don't see coming. But I got to tell you, every time I see bad news and the market starts to fall, what happens? Catches itself and drifts higher and it's making new highs again. And the reason I compare it to the late 90s is this went on for years. When I was trading in the floor, which started I moved out to Chicago in 1994 when I graduated college. I think I was working at the exchange about a year before I got my badge and started trading. So I became a trader in 1995. As I watched the S&P and the markets down on the exchange that traded the equities, I can't tell you how many days the market would just close higher. Even if it opened lower, somehow it would just drift and drift. And by the end of the day, even if it was a tiny bit, somehow it ended up positive. Well, by the late 90s, these days were just more and more and a bigger percentage until you started going around town and everybody was talking about the stock market. You'd hear about back then that some .com company, that the waiter or the waitress or the doorman or the cab driver or anybody would start talking about their new wild stock that they bought that was going up and how great it was. That's what I'm waiting to see. And I got to tell you, and if it doesn't come, that's actually better for the economy. But if it does come, just be prepared and keep an eye and be prepared that if it gets that crazy, that whatever you do in your normal day life, if, forgive me, I know that the microphone's better now, but things like that seem to make an impact. So we'll pretend like, I'll wait for it. But wherever you go and whatever you shop, like whoever you see on a day-to-day basis that barely notices the stock market, if they start getting involved, we have gone too far. That doesn't mean that is the dead high, but it would indicate that we've gone too far and a significant correction may come. I am not one of those big gloom and doomers. I don't see anything coming anytime soon. I actually think the economy is better than the media makes it out to sound. And don't get me wrong, I am watching people who have things, the assets continue to go higher, and those with wealth without that go paycheck to paycheck are having a tougher time keeping up. And unfortunately, I think that's likely to continue and even get worse, but it will probably stretch too far to where it gets asinine before it really corrects. And unfortunately, markets tend to do that. They go too far, they then correct, and they go too far the other way, creating opportunity on both sides. And really, all healthcare seems to be doing really well the past few days as well. And I think they got oversold too. So I don't see that this is any surprise. I think they were so out of favor that there's no reason they shouldn't react. And, I was watching another video from somebody and I find him really entertaining. And he's constantly talking about valuations, which I do as well. But understand there are there are a whole lot of ways, but there's two primary ways to trade, and they just have different personalities, and whatever fits each person's personality kind of fits how you trade. You can trade a trend, overpriced, underpriced, it really doesn't matter. Like if there's a stock that's just flying and continue to go higher until something changes in that, it probably continues. So there are plenty of people who are able to trade directionally. They're just more nimble. They get in and they're able to take the wave and stick with it and get out. The reason I say to be cautious of the other YouTubers, though, is in a bull market, a lot of stupid people look really intelligent. And I'm watching a lot of the videos of some really stupid people that are looking pretty intelligent, scratching my head thinking, this is not right, which is why I think we could be into the beginnings of a bubble and to be careful, because generally when the dummies are looking so smart is the beginning of something that needs to correct to shake them out. The thing is, they could be very early. Like I remember before the dot-com bubble started and computers were coming around and people were trading online, I saw friends and family members who started leaving their job, going to an office and trading stocks. Well, those who didn't really understand it and just bought and then they would sell and think that they did real well because the markets were going higher, when they finally corrected, they just wouldn't get out and they sat there holding positions. I remember one in particular who started trading, was doing really well, changed his whole profession and everything else, and he bought AMAT, AMAT at the time. And he started talking about a 2,000 share position. And AMAT was trading like $140 a share. And I'm sitting there scratching my head because I didn't even realize he had that kind of money. Well, AMAT started to correct and it fell and it was trading around 120. And he says to me, I don't know what to do. I think it's just going lower. And I looked at him and I'm like, so why don't you just sell and take the loss? And he's like, I can't do that. And he sat and he pretty much lost his money sticking with AMAT and a few others that he had too many shares in, while the NASDAQ corrected over 80% during that down move. So be careful about who you listen to on YouTube or whoever else. If they are not well-versed traders and they are just people who are buying, talking about leaps and selling other calls who don't really understand the risks of those leaps, be cautious. Leaps can be a great strategy. They are a great tool, but it is a way to leverage. It takes on more risk. Just because you're using leaps and buying them in an uptrending market and doing really well right now, if it starts to reverse, you have to be aware of what's going on and able to trade nimbly and actually transition to recognize what's going on in the markets. They can go up a very long time, and those leaps, by being leveraged, you may crush it. But just be cautious and understand the product that you're using. Anyway, I don't mean to give a soapbox, but I really want to see people save for their future and encourage it. I think I talked about the other day the girl who I'm going to start helping out when she starts her job. She's only 16 years old. And I sat with her and her mother and I was telling them, I'm like, look, The advantage of being so young is if she gets through a downtrend, she has to not be scared and see that as an opportunity, not a negative. She starts putting away now, and let's pretend for a moment, maybe I'm accurate, and over the next 2 years, you see the stock market go up another 100% or something ridiculous, especially like some of the companies, maybe not the entire indices because of how they calculate it. And she gets in, and over the next year or so, she's put in $2,000 to watch it go to $4,000. And she's very excited. As the markets then correct, the economy gets really bad, and over the next few years, that drops down to $1,000. Instead of being depressed because you're now 19 and you put in 2,000, you watched it go up, and now it's fallen and it's worth less than you originally put in, you are so young that even if it takes another 20 years to make new highs, you should be in the position that you're buying these things at a bargain and you're continuing to put away and continuing to put away, and you're getting it at a better price. If you're old like me, it's different. But the longer you have to put money away, the better you will do, even if there is a big correction. Because you have to hope in time, eventually, things will be better than where they are now. Now, hopefully, it wouldn't take 20 years to make new highs, but my point is if you're young and you start saving and you put away, no matter if it has a down move or not, I encourage people to save money for the future. They will be very happy. At the same time, you have to live life. I watched a video between Ari and Ryan. I forget what they call their joint channel, but Ari Gutman and Ryan Williams, who I like both. And Ari was talking about trying to balance, putting away versus enjoying. He's been traveling a lot. You do have to enjoy life. It can't be like put away, put away, put away, don't spend any money. And that's kind of how I was. So I'm talking from experience. Now, I'm very glad in some ways that I did, because I ended up saving pretty young and the markets did well and whatever else. But if I could go back in time, I would smack the younger self and explain, go out a little bit. Don't worry so much. Enjoy life. Travel. See the world. Like, it shouldn't all be save, save, save. But something should be save. It shouldn't be all spend, spend, spend either. Anyway, as always, if you've made it this far, thank you. If you haven't, well, then you don't hear me say this stuff, and maybe you missed a really good tidbit at the end. If you could do me a favor, if you haven't already, and hit that subscribe button, smash the like button. By all means, make some comments in the comment section. Maybe tell me what you're buying, what you're selling, if you're buying anything. Do you just watch the markets? Do you buy ETFs? Do you buy individual companies? Like, what's going on? Do you think we're going to be in a bubble right now, or do you think the markets are fine? Do you think we have a correction next week? So anything and everything. Have a great day. I hope everybody's doing amazing. I hope you're having such incredible weather and you get to sit outside and enjoy nature, because that gives me peace of mind. I'm going to go sit, watch the trees, listen to the birds, and do some editing. Have a good day.